And welcome to the Northern Australia Infrastructure Facilities Applying for NAIF Finance webinar. I'm Fiona Dix and I'm your host for today, and I'm joining you from our NAIF head office in Cairns, Queensland. We've also got members online today joining us from Darwin and Cairns, but wherever you are joining us from today, welcome. Before we start, I'd like to acknowledge the traditional owners of country throughout Australia and their continuing connection to land, sea and community. We pay our respects to the elders past and present. So we'll be recording today's session. Only the host and the content will be recorded, not the participants. Everybody will receive a link from today's presentation, and there's lots of great material that you'll be provided in that presentation. There'll be lots that we're covering, so don't worry if you do miss something, you'll get that recording afterwards. We've got a dedicated question and answer session at the end of each section, and feel free to type in your question at the Q&A section at the top of the screen. And we're going to do our best to get through as many questions as possible. Thank you to everyone who's actually pre-populated that field with some questions for us to get through during the session. We value your time, so we're going to really try and stick to our schedule. After the webinar, along with the presentation, we'll be sending up a follow-up email, and we've got a quick poll at the end of this session to get your feedback. All right, let's get started. I'd like to introduce our other speakers today. We have our NAIF CEO, Craig Doyle, and our Chief Investment Officer, Stephen Land, and they'll be leading us through the content of today's session. Craig, he joined NAIF as CEO in June 2022, and he's got experience from across Northern Australia, extensive experience in operational, project funding, and multiple industries. Stephen Land is NAIF's Chief Investment Officer, and he is a banking and finance specialist with more than 20 years of experience both in Australia and abroad. He leads NAIF's very skilled team in investment, and they have vast experience across a wide range of sectors across the north. So today, as I said, we'll be stepping through the NAIF application process, and we'll be taking a bit of a perspective from you guys there online today, people who have a potential project that they want NAIF to actually look at. But before we do this, it's important for you to get an understanding about NAIF as an organisation and look at some of the criteria that as a business that we have to adhere to and that we abide by under our government mandate. Craig, I'll hand over to you. For those who may not really have a great understanding of NAIF, can you provide an overview of the organisation for us?
Yeah, thank you, Fiona. Good morning, everyone, and thanks very much for joining us. Really appreciate your time. Look, I'm going to skip through some of the more formal stuff pretty quickly so we can get into some of the stuff that a lot of people will be online for around Stephen and the project process we run through. So NAIF's a $7 billion facility. We've now, even though the video just said about 4, we are very fortunate. We're almost up to 4.5 billion. We're running at a public benefit ratio to loan ratio of about 7 to 8, and we've created now 17,000 jobs. So we're very pleased with our mandate and the act that we have. But what those two pieces of legislation do is give us some rules and guidelines to which we've got to operate in. We'll work through it. We're very happy with the variability and flexibility of the mandate and the act in terms of what we can do. And it's all about creation of infrastructure in Northern Australia. I've said before, we've had people ask if Tasmania is within our Northern Australia boundary, but it's not. It's the top half of Australia. And we can basically look at almost all parts of infrastructure in that process. And as we go through, Stephen will explain as well what that might come through. So we've got the Act. If anyone's bored about reading legislation, you can go and do that. There'll be a link on our website. And then we also have a mandate, an investment mandate, which gives you a bit more detail outside the Act in terms of what our key criteria are. It's about public benefits, about creating jobs, very, very important about Indigenous engagement outcomes, and we'll talk about that later in the presentation. And it's all about creating good prosperity and us being a gap financier to get projects up. And we can talk about the term, the tenor. We can have concessional loans. We are loans. We do still get some people thinking you don't have to pay us back. Unfortunately, you do. But we have a lot of tools, and Stephen will talk about that, about what we can do in that process.
Yeah, that's great, Craig. Yeah, that's something that does get brought up quite a bit. We are a loan facility. We are not a grant. We're a loan facility for the North. So thanks for that, Craig. Now, look, you're all online today to look at NAIF's application process. Now, Stephen, as our Chief Financial Officer, of course, you're all over this. Can you give us a bit of a high-level snapshot of the steps that go from, I guess, that initial contact, that initial inquiry, through to receiving funding and then completing a project?
Thanks, Fiona. Look, I'll just take people through quickly just to give them an overview of the process before we delve into the detail. I think just setting off, firstly, making contact with us. We always ask people, get in contact with us early in the process. Not only do we provide funding, but as was mentioned, I've got a very experienced team with a lot of exposure across the North. They can also provide guidance and support to proponents on their investment journey. So first of all, our early assessment, as Craig mentioned, there's a number of mandatory criteria that need to be met, all contained on our website. So we really look to engage early to make sure that people are eligible from that perspective. Once we've got engaged and as people work through their business case, we then look to go through the assessment, really to ensure that business is creditworthy, that it meets all of our mandatory criteria, and also the public benefit Indigenous engagement strategy that we'll talk about a bit later on, both areas which we can also provide support for. Once we've got that, we have a process that we need to go through with our board. So we'll put together a short paper really to identify the opportunity, who the proponents are, and give an overview of the business case. And once that's supported, we then go through the due diligence. Now, this is really just to prove up the various aspects of that business case. Obviously we're doing it for ourselves, but also it's very important for the proponents as well. We're aware that we look at dozens, if not hundreds, of deals across the North over the course of our business, and that we pick up a lot of experience there that we can then convey to proponents in helping to develop. So things that they may not be aware of, both from a funding perspective, but also a business perspective. We obviously deal with a lot of contractors, logistics concerns, etc. Once that's been done, it's all proven up, we go back to our board for our investment decision. And that's really where we get endorsement. And that's, I guess, the key gating exercise for involvement here. Post that, very much like any other financial institution, we look to then put documentation in place to reach our contractual close and meet our conditions precedent, which is really making sure we've got in place all of the relevant approvals, etc., to basically provide those loan funds. So once we reach financial close, that's where the funding actually takes place. Loans are dispersed in line with the schedule, and then from there it goes across to our loan management team, and that's a really important part of our process. It's we're there for life, so it's not a case that you get the money from us and then we sort of walk away. We're involved, week in, week out over the course of the full loan, both from a reporting perspective, but also to provide that additional support. We've got a very experienced portfolio management team, which is able to provide guidance to our proponents if they do encounter any issues along the way.
That's great. And it's really great to hear that the team's, part of the process all the way through, and that such an experienced team with such an intimate knowledge of doing business in the North, because it is very different, as you said, in terms of logistics and so many other things that businesses have to think about for these major projects. So I guess, I'm a proponent and I've made contact with your team. We've had a chat, and it looks like, that my project's got legs and we're going to actually start to proceed with an application. So Stephen, can you actually take us through the process of putting an application? Let's start with, I guess, looking at scoping our project.
Sure, thanks, Fiona. So, we're here about, developing additional infrastructure in the North, which, involves, building things. That's what we're set up to do. So, first of all, we're going to want to understand, well, how are you going to go about building your project? Is it, what type of construction contract is it? How are you actually going to source resources, et cetera, et cetera. And included in that is also, I guess, the management of that. So making sure that we've got, the right processes in place that, are actually able to technically manage that project. Need to understand also too, what actually is the product going to, or what is the business going to deliver? So as Craig mentioned, we are a loan facility. We ultimately do need to get repaid. So we're going to need to have an understanding of, what's the product you're producing, what's the price of that product, sort of volume, market share, et all things which proponents will be looking at from their own profit perspective, but also really important in terms of assessing the serviceability of our loan. In conjunction with that, we look for market studies to really understand, well, how are you deriving those figures? So, you know, what percentage of the market are you looking to capture? Is it an export market? Is it purely domestic market? What are your competitors, etc.? Because I think competition, particularly in the north, is something that we really do focus on very closely. It's a remote region. It's got high transport costs. Oftentimes, difficulty attracting labour, so that comes at a premium, and that does put conditions on proponents up there which make them tougher to compete with other markets. Hence why we were set up and how we can also support proponents. We'll talk a bit more later about how we can help them with that. From there, we need to understand, based on those the prices in the market, what's the revenue makeup look like, and probably one that oftentimes is not considered by proponents, but is a really important part of the process is what are the offtake arrangements? We're what they call a project finance house, so we're really driven off the cash flows of that business rather than sometimes commercial banks look at loan to value ratios against assets, etc. We don't really look at that as closely. We were really about, well, how's the revenue being derived to service that loan? And that helps us to actually support proponents because our security arrangements may be more flexible than if you were to approach the commercial sector. So I think that's really the guts of scoping the project in the first instance.
Yeah, that's great. And then I guess we move into what's called the initial review process, and there's quite a few elements that make up this process. So can you just give us a very quick overview? They'll be on the screen now, and then we can sort of unpack these in a bit more detail.
Sure, thank you. So initially we need to first of all identify you're in the north. All the details on our website, and it's actually pretty detailed analysis there, but essentially from Carnarvon North in WA, all of the Northern Territory, and from Gladstone North in Queensland fits within our location. So we're looking at the CapEx, what's the size of the project, what's the capital structure of that look like, who's going to own the project, because obviously ownership and management is important. We want to ensure that the management is up to the task. They've got experience in that particular sector and operating in the north. And the business case is probably the key one here. Why is this project being set up? I mean, our mandate really is put in place for us for economic development in the north and population growth. So, we need to ensure that those two aspects are being met. But, what are you really looking to achieve up here? In terms of the financial metrics, we can talk in a bit more detail later. But really just some of these issues are things like, the serviceability of the loan, what's the ratio of income to costs, how much cash is left over to service loan, etc. I think driving off that is also to have a good understanding of who are the parties to this project. Who's your builder, who's the management team, are there third-party people coming in to provide additional support there? Have you got suppliers? So you contracted your feedstock, you've got contract for your offtake, really to make sure that all the parties are locked together. What we can't finance is what we call the field of dreams business case. If you build it, they will come. What we're really looking for is to ensure that there is actually a market there. So once the project's complete, it will be there, ready to derive revenue from its completion date. An important part of that's obviously also to the development status. Particularly across the north, there's a number of development approvals which are required, whether it's environmental, working with traditional owners, other forms of approvals required. So we need to understand the status of that. At this stage, we don't need to have them all confirmed, but we need to understand what's the time frame around achieving those and what's the process in place to do that. Obviously, people come to us because they need some funding, so we need to understand what the funding plan looks like. We can provide an element of the debt, up to 100% of the debt, but what we can't do is take all of the financial risk in a project, and that's a mandate requirement. So really looking to understand, out of the CapEx, how much funding do you require? And then the balance with that will be equity, so there's the fundraising. So we want to have an understanding of how that's going to be raised or derived to ensure that once the project's been approved by our board, then all of the funding in place for that to then turn earth and get the project moving. And I guess akin to that is also the timeline. What stage? Sometimes we speak to proponents very early in the process, and that could be 12, 24, even longer months ahead of the project actually being ready to move forward. And we do a lot of work over that timeline to help support proponents in their journey. We can't provide advice. We're prohibited from doing that, but what we can do is provide guidance and the benefit of the expertise and experience of the team in operating in the north.
Yeah, that's great. Thanks for that, Stephen. There is quite a few elements to that initial review. So let's take a little bit of time to go into those in greater detail. Let's start with project CapEx and location. Stephen, can you just go through this element of the initial review for us?
Sure. Look, I'll go through fairly quickly on this. I mean, really, when it comes to the project CapEx, what's it going to cost? Oftentimes, particularly early in the journey, those costs are uncertain. People haven't actually gone and engaged with builders. They're not clear on necessarily the cost of the, might be the materials, the logistics of actually getting them on site, and that is oftentimes a very important part of the cost build up in Northern Australia. So that's building that out, whether it's quite uncertain early in the process or quite certain. So by the time we actually take this project to our board, we need to have a high degree of certainty over what that looks like. Understand the breakdown of that, the nature of the contracting. Is it going to be a turnkey wrapped contract? So essentially one party is responsible for delivering everything. Is it going to be done under a number of contracts where the management of the project will be actually responsible for bringing that together? Is it going to be phased? Oftentimes, particularly with mining projects, there might be an initial project which is to get up and running, but then there'll be add-on projects to that to enhance the profitability and of that project. So having a good understanding of how that's going to link together and be costed. Obviously, the location we mentioned earlier. So it has to be in the north, or if the vast majority of the benefits flow to the north. But that's something we can discuss with proponents as and when they want to talk further. But the one that's probably oftentimes not thought about enough up front is just around land access arrangements. How are you actually going to get access to it? Is it going to be freehold? Is it going to be leased? There's a variety of mechanisms to actually access land across the north, and it's something that we're very keen to help provide our expertise on.
Yeah, that's great. Thanks for that. Now, it's also important for us to get a bit of background on who is applying for this finance and behind the project. Can you give us some information, I guess, about ownership and management?
Sure. So the ownership management's two parts, sometimes combined, oftentimes different. Who actually owns the business? In terms of who's got the equity in the business, and that's important just to ensure that if there's any issues, particularly if there's foreign equity involved, that that's being managed as part of the process. Whether there's some sort of foreign investment review board approvals required or other government approvals, and that's not to restrict who can apply for our funding, but we need to understand that clearly up front, because obviously there could be some sensitivities around that issue. But probably the bigger one for us is the management team. We really want to make sure that management team, it's got the experience, it knows the environment it's operating in, it's not going in cold because a particular project might work in the south with higher population density and much more established logistics networks, it may not work in the north. So oftentimes we see proponents come to us, and it's only over time when we're engaging with them and all of a sudden they realise they might need to bring some additional experts in, whether that's on a full-time or just a contract basis to provide that local experience. I guess off the back of that, we want to understand, well, how decisions are going to get made on these projects. So if there are any difficulties that are engaged, how's the process around resolving those? Is it the management has all of the decision making? There might be a board sitting over the top of that's involved as well. So just understanding these, and just to, that everyone on the call, don't take these as black and white issues. It's the sort of thing we just like to engage with, and if there's any potential issues, to identify them early so they can be managed as part of that. And I guess that probably also comes down to the risk management, where it's not that a risk is in or out of scope, but we need to understand them and how the proponents are going about managing those. So if you're dealing with procurement of might be assets from offshore, might be heavy machinery, how are you managing the foreign exchange risk on that? What about the cost of shipping, etc.? So again, the team can provide input based on our experience across the north. And particularly in Northern Australia, the stakeholder engagement piece is critical. Particularly with traditional owners in the region, we want to really understand how's that being managed, how's the engagement been to date. to make sure that everyone's on the same page and there's no red flags raised later down the process. We want to ensure that everyone's on the same page and working together to deliver these projects and deliver that economic benefit.
Yeah, that's great. Yeah, I guess stakeholder engagement, as you said, it is important. I guess in the north, it's such a vast piece of land, but we all seem to know each other. You mentioned before as well that the business case is a really important component of this initial review. I'll get you to take us through the business case and also carry on and go through some of those other key elements that will actually take us to the end of that initial review.
Sure. So look, the business case, it is really identifying, what's the problem you're looking to resolve. All businesses are there to solve a problem, whether it's producing a product, a service, helping to grease the logistics chains, etc. So we understand, what is your business case? Why are you doing the project? What problem you're looking to address? And from that, we looked at and drilled down to, well, what's supporting that viewpoints. So, have you done market studies? Are there third parties who've done work? I mean, oftentimes, particularly in Northern Australia, there's been government involvement. So there might have been a study done around, could be, say, for example, refrigerator logistics, where I think the government realises that, having a network of refrigerator logistics hubs would certainly help to support agriculture in the north and also food supply. So that work's been done, and then often proponents might then piggyback off that and go, look, we read that report and we think we've got an opportunity to help support that. And probably the one that oftentimes isn't thought about enough is public benefit, where we're using taxpayer funds. We need to make sure that those funds are delivering not just a profit to the proponent of the project, but also more broadly. So are those projects being built with local contractors? How are the labour force being sourced, etc. So it's a more holistic approach, and I think this is where we are quite different to the commercial banking market. We're looking to deliver a project, we're looking to deliver an outcome, and then we sort of work backwards from there. So rather than selling you a product, we're trying to then back solve to work out, well, what is required to get this project moving forward, and the greater the benefits to the region and particularly traditional owners, then that gives us more flexibility in what we can help to support in terms of any potential concessions. And sometimes they're structural, so we might be able to do longer term loans or defer amortization, but there is a holistic view taken of that rather than just a pure numbers view. And then lastly, just really around evaluating the costs and risks. So like any business, there's risks. Some of them are large risks, some of them are small risks. So what are those risks, and I guess the quantum of them, and then also the cost aspect of things in terms of if you've got a business with a very high cost base relative to its revenue, then it's more susceptible to external shocks. So they're the kind of another thing that we also look for in that business case. We're just going over to the next page. In terms of the financial metrics, that as mentioned earlier, we're a cash flow lender. So whereas oftentimes banks look to the security in terms of how much they're prepared to lend, we're much more focused on how much debt can be supported with the revenue from that project. So things like the leverage is an important ratio. So how much debt is the project got versus the earnings to service it, the gearing, how much debt's in there versus the equity of the project. And these are all very much bespoke. We don't have rigid criteria like some other institutions. We're really there to, on balance, make sure that the project is viable, but also providing the most support possible to proponents to help develop those projects. So some of the other things we look at is the internal rate of return. We want to make sure that there's a balance of risks and rewards. So if we're able to provide a concessional loan, we need to ensure that the equity, i.e. the proponent, is not getting an outsized return. That's not our role. Our role is really to make sure the project proceeds and with a balance of risk and return at both parties. Things like margins, the greater the margin, the more flexibility that the project will generally have, and sensitivities to changes. So, if the cost of the inputs was to go up, or labour costs, etc., what impact would that have on the viability of that business and the ability to repay our loan? Just going up the next page in terms of the key parties. Look, just quickly touch on these. You can read in the pack, but really to understand who are the players in this this project. Who are the various stakeholders, and that can be a whole raft of people. Any sort of partnerships and alliances. Oftentimes we'll see projects partnering with a local business. So it might be there's a large mining operation. Somebody comes to us saying, "Oh, look, we're doing some supporting role in construction of that." So looking at those kind of contracts and agreements. Again, the governance, because it's really important that we understand who's actually making the decisions here. We want to make sure that the people making the decisions have got the required skills and experience, and also any financial arrangements. So depending on how the money's invested, there could be potential issues in terms of, is it going into pure equity or subordinated debt into there, and also to ensure there's no conflicts of interest within the arrangements that are being proposed. So in terms of the development status and approvals, I won't harp on this again, but we just need to understand what approvals are required and what stage they're at. So across the north, one that can be particularly sensitive is the environmental, the EPBC Act, covering the environmental approvals, where it's a very detailed approval. The timing of it can be quite long. But without that, the project can't actually proceed. So that, talking through what those approvals that are required and the status is a pretty critical part of what we do. And then on to my favourite part, the funding plan. So we just need to understand, what's being proposed, and this is an area where my team can certainly support proponents in terms of how much debt could be provided against a particular project, depending on the cash flows. And therefore, the difference between the project cost and the amount of debt, obviously the equity check. We also need things like cost overrun facilities. I mean, there might be some contingent equity coming in to support projects if they do experience cost overruns or delays in startup, etc. So we're predominantly a senior debt lender. We also have the ability to do some junior debt for the particular projects if required. And then the balance is that equity check. So that's where the proponent needs to go out and raise those funds. It might be in the wholesale markets. It might be friends and family. It could be a raft of things. But understanding how they're going to go and actually bridge that gap is important. And then just in terms of where that money goes, obviously the construction's a big part. Operations is something that's often overlooked. The ramp up in these projects can be longer than expected. So we all like to put rose-tinted glasses on, and somebody might think it's going to take 3 or 6 months to ramp up, but oftentimes it takes longer. It might take 12 or more months. We need to understand, how's that going to be funded? What's the base of the operations? Are they employees of the company? Are they using a third-party service provider, etc.? But again, the team can certainly provide feedback on this, and this is an area where we often find that the involvement of the team and that guidance can really help people to develop their funding plan. Look onto the timeline, really just to have an understanding of what the timeline of the project is, and then we can also provide the timeline around the NAIF funding aspects. So as I said at the beginning, we really like to work hand in hand from a fairly early stage. Look, the NAIF funding process it's relatively straightforward in terms of the process, but just through our internal governance arrangements under our investment mandate, it can take a little longer than expected. So we sort of generally say, for a project where somebody comes to us, they've got a fully developed business plan, and it's pretty clear how they're going to go about executing it. It's in the 6 to 9 month range, but that's very much dependent on at what stage they come to us. So a very early stage project might take 2 to 3 years to develop, get all the relevant approvals and stuff, but we can be a part of that journey. So we're very happy to engage. Whether it's just an scheduled catch-up call, whether it's more formal engagement, but really, we see ourselves as being a partner in that process, and supporting people along that journey.
Yeah, that's really great. That's a lot of information that we've just gone through. As I said before, we will actually be packaging up this presentation and sending it out. So don't worry if you think we've sort of gone over something they didn't quite actually get a grasp of. We'll be sending out this presentation and there'll be various links in there as well. And Stephen, it was great to hear you, especially talking about those funding models. What's coming through is that, your team has a great deal of experience of doing business in the North, and that it's really a solutions-focused approach to going through that finance journey. But we'll give you a bit of a break now. If you can get a drink of water and give your voice a bit of a rest. I'll bring in Kathy. She's my colleague in Darwin. I was just wondering, Kathy, have there been any questions that we can ask for Stephen and Craig to answer?
Yeah, thank you, Fiona. I might just throw to Craig. Craig, you mentioned the mandate and the Act at the beginning. Can you just detail what is NAIF's operating timeline?
Yeah, thanks, Kathy, and thanks for the question. Yeah, so in 2021, NAIF did a statutory review. We've got a life until 30th of June 2026, so roughly 2 years. We expect a review to be undertaken by the federal government in the second half of this year. We're very confident about that outcome and that process. And I will say that no one should be worried about still approaching us, that if you come and approach us and do a loan, we've already got $4.5 billion worth of loan commitments out, worth 18 billion of project value. Still come and see us. There's no risk around any of that coming to talk to us and getting a project into our pipeline. But that's our current timeline. But we're very hopeful and confident with what's being achieved now. And as Stephen has said, the expertise and experience we're gaining every time we do another investment decision in another sector in the North just grows our experience and the team's ability to support projects as they come through our door.
Okay, thank you. And another one for you. Can you detail what area we cover? There was a question around please define North for WA. So could you just go through the legislated area in which we operate?
Yeah, thanks, Kathy. I'm not going to try to name the local government areas around that area. I'm happy if you have a go. Yeah, it is a legislated line. I think we have had some people talk about, can we just move the line? Unfortunately, it's legislated. So we always use Carnarvon on the West Coast, and then it's a lumpy line that goes across to about around Gladstone in the East Coast. And the line is lumpy because it follows local government boundaries. So that's basically where we can. Look, we've had a couple of instances, one in Queensland where a project's just below the line. I think it's around 30 kilometres. And we actually approved that project because the public benefit and the job creation, everything was going to come from above the line. So if you're close to that line, depends what the definition of close is. Launceston is not close enough that I got asked last year. Please come and see us anyway, and we'll just be open and honest about that. But that's our legislated line, Kathy.
And another one for you, just giving Stephen a rest. How does NAIF work with and interact with other federal government agencies and special investment vehicles like NRFC and CEFC? Do we bring them in on projects? How do we work with them?
Yeah, great question. And you and your team do a great job on this, and Stephen, something that we've really focused on. I think there's $101 billion allocated to special investment vehicles in Australia, and we're only 7 of that. So I think Stephen will nod. I think we've now done 4 or 5 deals in projects that have been all the way through our processes with the Critical Minerals Export Finance Australia. So we're very keen to share the different risk profiles. We're very hopeful in the near future we can announce something where we've worked with another CIV for the first time in a very important high urgent area in Northern Australia. And we're very keen, and we have, I think, Steve and his team, our stakeholder team led by Kathy, we actually talk to the other CIVs once a month at minimum and share our pipeline projects to see where we can share opportunities. Because we've got a different risk profile, we're not a commercial lender terms, we're finding that we can come in and play a role, as Stephen's very well explained, where other CIVs can't, but together we can minimise the risk but also provide more lending opportunities to those proponents. So it's something we're very focused on. We're very close to the new NRF that's starting up. They've obviously got a journey to set that up, but we already believe there will be some opportunities with them as well.
And just the last one before we go back to Fiona, for you, Craig, if you've previously received Commonwealth grant funding, are you still eligible for NAIF funding?
Yeah, look, Stephen can correct me if I'm wrong, but if you get a grant, whether it be through the state or federal, and obviously that's part of it, we will usually consider that as equity of the proponent, depending on the terms and conditions around that. But absolutely, we get a lot of projects that might get funding through the feasibility, pre-fees, building their business cases and development. That's absolutely no restriction on us. In fact, that would be encouraged by us. And I'm sure Stephen would say that if people have spent some money to build up their business case before they came to us, that means it's a more developed project for us when you talk to our team, and definitely something that it's not going to inhibit anybody talking to us.
Thanks for that, Craig, and that was some great questions. We'll return to the presentation and we'll get back to looking at our NAIF finance applications. There's a few final aspects that we need to cover off. And Craig, whilst we've got you here, what we'll do is get you to actually take us through what we have is the public benefit information and what's required and why is that an important part.
Yeah, thanks, Fiona. Look, I'll move through these pretty quick. I mentioned public benefit at the start, and Stephen's mentioned it several times. It's a major criteria for us. It's about stimulating. We don't have a term sheet, as Stephen has said. Our view is all about how can we be a solutions-based gap financier to provide jobs, economic stimulus and long-term sustainable outcomes for the communities in where the projects are run. So it's something very important to us. I know it's something that the board is very focused on when Stephen brings an investment decision forward. And as I said before, we're running at a ratio of about 7.5 for every dollar we've loaned so far, which is we're very pleased with, and we continue to look at that. Look, instead of getting bogged down on the time, Fiona, please don't download the public benefit guideline off our website. That should be very informative if you want to know. But it's something that Stephen and his team will definitely talk about early on in the process. We typically don't do the public benefit analysis until you get into the due diligence stage. But it is something that our investment team will definitely start to talk to you about early as you engage with us around what those benefits might look like. And it is a major factor in our decisions.
Yep, that's great. And what about an Indigenous engagement strategy? It's part of that criteria that is, our remit.
Yeah, thank you, Fiona. It's something that I know everybody in NAIF and my team and Kathy's team that leads this is very pleased to be part of. We're the only special investment vehicle that part of the conditions of our loan is that the proponent must have an Indigenous engagement strategy with the traditional owners in that area where the project is located. People should not be worried about that. We're here to facilitate it. I think we've got 4 people in total, about 10% of our workforce who are there to help the proponent and traditional owners to come up with that. We're very proud of it. I think the latest numbers are through our project so far, there's been over 52 million of procurement spend directly to Indigenous businesses, about 1.6 million in training. And I think it's now over 1,000 jobs directly related to Indigenous outcomes through our projects with our proponents. So we're very pleased with that. It is something that is a mandated criteria for us. So there is also some links there around the Indigenous engagement toolkit. It's just been updated by the team. So please go and have a look, and then also reach out to us if you need to know anything about that. It's through the process with Stephen and his team.
Yeah, there's some great results in that procurement and employment area, and it's fantastic to see them, I guess, on almost an exponential sort of rate of rise. It's fantastic. Stephen, there's a few final elements that we just need to cover off to finalise our application process. That's the environmental social considerations, AIPP plan, and our workplace health and safety accreditation scheme. If you could just take us through those, thanks.
Sure, look, I'll just quickly touch on them so we've got a bit of time for some more questions. But look, in terms of the environmental and social review, all of our projects have to comply with all applicable Australian legislation, regulation, including the environmental ones. So we're very conscious to make sure that all of those have been met, and we also look at more than just letter of the law, much more holistic approach, and that extends to the social review as well. So we're not just looking at the impact of the individual project on the region, we're also looking at the on effects of it. So is there going to be increased it could be increased pressure on housing in the region, etc. Could be strained logistics. If you've got heavy trucks using the road, we'd be looking at the impact of that and what's going to be used to mitigate that. So I think it's a holistic approach. It's definitely not a one size fits all, but it's an important part of our assessment of the project. In terms of the AITP, look at, everyone can read this in the pack when they get it. Essentially, if there's more than $20 million involved of NAIF funding or additional government grants, etc., then the project needs to comply with or produce an Australian industry participation plan. It's a well-trodden path that you can see the information on the website. Nothing to be concerned about. Just an important factor. Again, it's part of the planning of the process. These are all things that we can help support proponents in including, and that then the work health and safety accreditation, important part of what we do. So if you're using a contractor that's going to do a contract for more than $4 million, they need to be WHS accredited. So it is a process. A lot of contractors have already got it in place. But if you're going to use a contractor that doesn't have the accreditation, that's something we also put into our timeline, because they will need to achieve that before we can advance any funds under the terms of that loan. So oftentimes have projects which use a lead contractor to help address that issue. So that the lead contractor will have the accreditation and then use a number of subcontractors underneath them. But again, it's all it's laid out on our website. A quick Google search, you'll find the underlying requirements on the government's websites as well.
That's great, and that, I guess, brings us to I suppose that's one of the final elements of looking at that application process, and there is a lot of information there. And as we've alluded to throughout the presentation, there's a few links in there that actually links you up with toolkits that we have on our website. They're great step-by-step resources, and of course we're all here. Just reach out to the team if you have any questions. We'll throw back to Kathy. I think she's got quite a few questions. We've got a bit more time. So Kathy, are there any questions you'd like to direct again to Craig and Stephen?
Yeah, I might just ask Craig this one. What is the minimum amount of funding that we will service a loan with? Craig, can you just detail that for us, please?
Yeah, there's no actual defined number. As Stephen's gone through, most of our projects are quite large. So look, we've got no number. We'd encourage people to come, and maybe there'll be a question on small loans at some point as well, because I know it's something that's very interesting to us as well. But typically our smallest loans probably around that 15 or 20 million at the stage. And it's not that we can't do less, it's just the process we've got to run through about the public benefit analysis, which the proponent pays for, that we think at the moment that's probably a sensible threshold. But look, I think if you want 1 million, you probably need to talk to us about our small loans program, what we're trying to do there. If you're in that 20, 30 and far above, then definitely just give us a chat and we can have a chat about what we think we might be able to do.
Can you just talk about the small loans program in the Northern Territory? And then maybe there was a question maybe about when that might be coming for Queensland and WA.
Yeah, thank you, Kathy. It's something that we're all very keen on. We know that in a lot of small communities in Northern Australia, a $5 million loan for a $5 million project can give just as much benefit as a $1 billion project. We've, through great work from the team, we started and launched a program with the Northern Territory Government called the Northern Territory Infrastructure Loans last year in September, and that process is up and running for loans up to 5 million and in exceptional circumstances up to 10. It's a $66 million program. NAIF provided 50 million of that. The Northern Territory Government actually runs that and chooses the project. We have some involvement to make sure it's all within our mandate. So you get the benefits of the NAIF mandate loan. So you can't go and put excessive margins on. So that's working quite well. And I think we're very close to getting our first couple through that process. We want to duplicate that in Western Australia and Queensland. I think in Western Australia, we're showing some really good signs now of maybe getting to a process with them through, Louis and the team, Steve's team. So I'm very hopeful that maybe Western Australia will have a similar program in maybe in the next 6 or 9 months. Queensland, we've been working for a long time. I won't overcook it. We are very keen. We've got a model that works now. We're willing to put money in, and we're working with them closely as well on how we can get that process over the line to launch that as well. So I know I've been saying stay tuned for a little while on some of these, but the good news is with one jurisdiction up and running well, and we will plug away. We think it's very important and a high priority for us. So we'll keep working on that.
Thank you, Craig. Stephen, can you share with us how interest rates are attributed to the loans once they're approved? What's the interest rate that you attribute to the loans that you service? Thanks.
Thanks, Kathy. So there's two parts of the interest rate. There's the base rate. So that's the the cost of raising the funds, and then there's the margin, which is for the credit risk of the project. So our base rates are set against the Commonwealth bond curve. So we look at the average life of the loan, and then we match it up against the bond curve, and then the margins derived against the risk of the project. So in the first instance, we'll look at what a market equivalent margin would be, and then depending on the public benefit and other sort of factors, we can then look at providing a discount against that loan, and that concession is linked to first of all what are the benefits of that project, but also against I talked about the return to equity earlier. What's required in order for that project to proceed. So oftentimes we don't actually provide a pricing concession. We just provide the liquidity, but it may be that because of factors that are unique to the north, particularly around the cost of construction and logistics being much higher, in order for that project to actually move forward, they need to be able to access some cheaper debt, and that's where we can look at providing concessions against that. But in the first instance, we sort of look to the market, and then these factors against it. But the fact that we price against the Commonwealth bond curve, it already gives proponents a pretty significant benefit versus what they would see in the private sector.
Thank you, Stephen. Craig, where does NAIF stand, and how do they approach investment into Indigenous social enterprises? Is it the same loan process? Yeah,
thanks, Kathy. Yeah, absolutely. It's exactly the same. And as Stephen said, we don't have a term sheet, and every project we work on, its public benefit and its benefits as we start to detail what that finance would look like. And I think it's a high priority for us. We've also got, other than our act and our mandate, a statement of expectations that's been put out by the minister, which clearly also articulates how important it is. We've already got fantastic tools around the IES, and we're getting major benefits out of that. But look, I think we treat it the same, but we also understand that the benefits will probably be greater with some of those projects. So when Steve and his team look at those, that whole public benefit, and then how he can structure the deals with his team around tenor, margin and everything else, will definitely take into account what that project will likely benefit that community, and particularly in terms of the Indigenous space. So we do treat it the same, but I think depending on the project, where it is and size and everything else, Stephen's team can use some levers depending on those benefits and the analysis on how we can help that project.
Excellent, thank you. And Stephen, I think there's a bit of a furphy around our timelines, and that it takes an inordinate amount of time compared to the commercial market. Are we, in our approval process and assessment process, are we aligned with what the commercial market has from a timeline perspective?
Look, I think we probably are a little longer, but I think it's important that people do a like-for-like comparison. So oftentimes when proponents come to us, it's early in the process. They've got like a business plan, but it might be quite underdeveloped and it needs work, etc. Whereas often, usually when they go to the commercial market, and we see this particularly with larger projects, they've already got an advisor, they've already done the due diligence, etc. So I think comparing like for like, being honest, we're probably a little slower, but not as slow as people sometimes perceive us to be, mainly because we're looking at projects from a much earlier stage in that process. But as I mentioned earlier, I think from first approaching us, if people have got a reasonably well developed idea of what they're looking to achieve, to getting to contractual close and signing out the loan agreements, we sort of say between 6 and 9 months. And I think if you looked at the commercial market, it's probably maybe it's a couple of months faster, but not that significant when you look at the timeline for a lot of these projects, which often spans into years, and particularly around the benefits that we can provide in terms of whether it's longer tenor or other structural support to those projects, which is something that it's probably the most important thing that we do, is those structural features rather than just the cost of the debt. And I think, particularly for projects that have long ramp ups and stuff, the ability for us to provide structural benefits around that is far in excess of what the commercial market can do, just by the nature of the way we're structured.
I'll just ask this one to Craig. Is funding limited to shovel-ready projects, or can they fund project development?
At the moment we're not allowed to do grants. And while I would never say never, I think, as Stephen's explained, if shovel ready it's a wide term. We always get very passionate proponents come through to Stephen and his team who think that they've already got their project ready to go, which is not uncommon. Look, unfortunately, right now we can't fund, $500,000 or $1 million for a pre-fees or fees. We're not allowed to do that. It's something that we want to have a look at as part of our review, to be honest, to see whether there is a role to play. That role is usually filled by state governments through different grant programs and federal government and so on. And we can help. If someone comes to us and starts talking to Stephen's team and the stakeholder team, we might be able to put them onto, an agency in the state system or the Northern Territory system or the federal system to have a talk to. We can't guarantee any outcomes, but yeah, we're as Stephen said, we're really there to get that final build up and running. So we need to make sure that the business case and everything that Stephen's covered today is pretty well primarily done before we push the final trigger to lend money.
Thanks, Craig. Stephen, does NAIF have a panel of preferred consultants that we deal with? And if applicants want suggestions on who they can speak to, can we make recommendations?
Look, we don't make recommendations. We're agnostic. But look, if people come to us, we can certainly sort of give them some guidance around whether we think they're appropriate or not. So yeah, please come and talk to us around those things. But one point I would make is don't go and sign up a consultant for a NAIF loan before you've spoken to us, because not all consultants would meet our requirements.
Yeah, and I'll just leave this as the last one. I think we've gone over time, but there's still a lot of people online. Does NAIF lend to local government with projects that have no offtake revenue? I think that's probably a clear one for you to answer, but there are obviously local government people online. So can you just give some clarity around that, please?
Sure, look, happy to do that. So we don't have any particular treatment of local government. We treat them as other proponents. But I think there's two aspects. One is, we need to see that the project can, I think the colloquialism is, wash its face. So, we need to see cash flow being generated to service that loan. And also we don't look to support projects where the funding is coming from the general taxpayer rate base. So yeah, we really look for projects which stand on their own 2 feet. And to date we haven't really seen any of those. But if somebody came to us with a project that was commercially viable, we would absolutely be keen to look at that further.
Thank you both. I'll throw back to Fiona, but for all those questions we haven't been able to get to, we will come back to you online with some answers, and we will be circulating the presentation after the presentation today. So I'll throw back to you, Fiona. Thank you.
It's great. Thanks, Kathy, and thanks, Stephen and Craig, for those insights. There were some really great questions from everybody online today. And that brings us actually to the end of today's webinar. We have gone just a little bit over time, but before you go, I would like to invite you to participate in a brief poll just to help us gather some feedback and will help us with future programs and webinars. Just click on the poll that's popped up on the screen and share your thoughts. There's only 3 short questions there. Once again, thank you, Craig and Stephen, for your time, and the NAIF team online for helping us walk through the process today, applying for NAIF finance. As we said and we saw throughout the presentation, there's a great deal of information there, and I encourage you to save that and use it as your own little personal investment toolkit as you go through the NAIF investment journey. But just remember, you can always reach out to our team. We've got forms online, or just pick up the phone or email, and we can back to you with some further assistance. So thank you all for joining us today, and we hope you found this webinar informative and insightful. And if you've got any further inquiries and assistance that you need, as I said, please don't hesitate to reach out to NAIF. Have a great day. Thank you.
Thank you.
Thanks all.